77,120. Bitcoin just wiped out 2 weeks of gains in a single yield-driven flush, yet the weekly chart is still screaming buy. Here is the uncomfortable truth. We are sitting inside a massive trap, and most traders are about to get chewed up on the wrong side. There is one danger zone and one hidden opportunity today. I will show you both. Stay until the end because I am giving out 3 exact entry and exit levels you can use now. Whether we rip or collapse, write this number down. 75,933. That is the level that changes everything. Here is your instant market verdict. The 5-hour trend is strong sell. The daily trend is strong sell. But the 1 hour has flatlined to neutral, telling us the initial panic dump is exhausted and market makers are about to engineer the next move. My session bias is range-bound with a sharp bearish tilt as long as we trade below 78,398. The one invalidation level that proves this bias dead wrong is a 1 hour close above 79,339. If that happens, bears get trapped and we rip. But if 75,933 breaks with volume, the whole structure shifts into a macro correction. Type 75.9K in the comments right now if you believe that line is the line in the sand. I am watching, now let us walk the chart, top down, because the multi-timeframe alignment here is lethal if you ignore it. The weekly trend is still a buy. Price remains far above the 200-week moving average, which is sitting near $42,000, sloping upward like a sleeping giant. This is not a bear market. What we are witnessing on the weekly is a pullback inside an uptrend, potentially a bull flag. But when we drop to the daily, the picture darkens. The daily trend is a strong sell, and the daily MACD is accelerating below the zero line with no divergence. The 20-day moving average is now at 79,339, and it is bending lower, acting as a brick wall on every bounce. The 60-day moving average sits around 81,500, and the 200-day moving average is down at 72,400 and still rising. So the daily structure is shouting, sell rallies until 79,339 is reclaimed, now compressed to 4 hour, where the real short-term damage lives. The MA20 has crossed below the MA60, a death cross, and both are sloping down. MACD is buried below zero, no bullish divergence yet. This is a momentum graveyard for longs. The 4-hour chart respects a clean descending channel. Resistance is 78,398, the top of the channel and the 4-hour MA20. Support is 76,695, the recent swing low, and below that the March volume-weighted support at 75,933. On the 60-minute chart, we are consolidating around 77,100, with the MACD flatlining. This is a classic compression before an expansion. Here is what most traders miss. When the 1 hour neutral pauses directly under declining moving averages on the 4-hour, it usually means the path of least resistance is still down. The pause is not strength, it is reloading. But there is a cross-asset web that adds dangerous texture. Bitcoin right now is the risk asset shadow. The S&P 500 lost the 50-day moving average yesterday and is clinging to 4,100. The BTCS and P500 correlation is running at 0.85. Yields on the 10-year ripped through 4.7% after the Senate approved a spending package that the market reads as inflationary and debt-laden. That strangled equities and dragged Bitcoin down from 79,000. If you look at the S&P 500 4-hour, it mirrors Bitcoin almost tick for tick. So any bounce in equities will bounce Bitcoin. But if the S&P breaks below 4,050, Bitcoin is testing 75,933 fast, yet there is a hidden divergence. Overnight, a second headline hit. Iran is now using Bitcoin to bypass sanctions and control Hormuz Strait shipping payments. That is a structural geopolitical bid. While equities fall on traditional risk-off, Bitcoin could begin to absorb a safe haven premium that gold has been hogging. This is the fracture point. If Bitcoin starts outperforming the S&P 500 during the next equity dip, that is your buy signal of the month. But we are not there yet. Funding rates confirm the sentiment shift. On Bybit and Binance, Perpetual swap funding rates flipped negative for the first time in 2 weeks. Shorts are now paying longs. When negative funding meets a weekly uptrend and a key support, a violent short squeeze is on the table. The market is too one-sided. Smart money loves that DOSO my 1 to 2 week directional lean, cautiously bearish while below 79,339, favoring selling bounces. But I am ready to flip aggressively bullish if 75,933 holds, and we reclaim the 4-hour MA20. The invalidation for the bearish thesis is a daily close back above the 20-day moving average at 79,339. The invalidation for any bullish attempt is a daily close under 75,933. Between them, we scalp. Most people will skip this next section, but this is where money is made. Keep watching. I am giving you 3 trade strategies, fully scripted with triggers, stops, and risk-reward strategy 1, the sniper. This is the conservative approach, aligning with the daily strong sell. The trigger condition, price pulls back into the resistance zone at 78,398, which is the 4-hour MA20 and the upper boundary of the descending channel. Wait for a 15-minute bearish engulfing candle or a MACD crossdown at that level. Entry is 78,398. Stop loss goes at 79,350, just above the daily MA20 and the structure resistance. That gives you a clean invalidation. Target 1 is 77,100. Where we are now, a quick bite with a risk reward of 1 to 1.2. Target 2 is 76,700, just above the first support, for a 1 to 1.8 reward. What voids this setup is a 1-hour candle close above 79,339. If that triggers, the short is dead and you cut it instantly. This is selling into strength, not chasing panic. Type your BTC range for tomorrow in the comments. I read them, and I want to see how aligned this community is. Drop your high and low strategy too, the active trader. This is a standard mean reversion long, exploiting the negative funding and the support base. Entry condition, price dips into the 76,695 to 76,700 zone. Wait for a 1-hour RSI to drop below 35 and then a 15-minute bullish engulfing or double bottom. Enter there. Stop loss is at 75,800, which is below the major 75,933 defense and under the recent wick lows, leaving room for a stop hunt. Risk is about $900 per Bitcoin. Target 1 is 77,800, a minor intraday supply zone. Target 2 is 78,390, the same as our sniper short entry, giving you a 1 to 1.8 risk reward. Trailing stop rule. Once target 1 is hit, move your stop to break even. This is a counter trend trade, so size smaller. Your edge is the funding squeeze, but you are fighting the daily MACD. Let us see how aligned we are. Type yes in the chat if you would take that 76.7 long, or no if you think it is catching a knife. Strategy 3, the aggressor. This is a high-risk momentum breakdown play, only for those who know how to lose small and manage risk aggressively. The setup, a decisive 5-minute close below 75,933 with volume spike. Do not front-run it. Wait for the breakdown, then wait for a retest of the broken support as new resistance, around 75,950 to 76,100. Enter a limit short at 76,000. Stop loss is at 76,700, just above the prior support-turned resistance zone. Your risk is $700. Target 1 is 74,500, a weekly gap fill. Target 2 is 73,000, near the psychologically important handle and the rising 200-day moving average. The risk-reward exceeds 1 to 2. Explicit warning. Liquidity voids below 75.9 can create slippage. This only works if the breakdown is clean and confirmed. If price reverses back above 76,700 immediately, you are wrong. No hesitation. Cut it. Never risk more than 1 to 2% per trade. No positions through high-impact news. Stops are non-negotiable. Here is the one critical level for the next session, 75,933. If it holds and we reclaim 78,400, the bulls are back in town. If it breaks, we are talking about a move to 72,400, the 200-day. Tomorrow we have Fed speaker chatter and the weekly jobless claims, which will directly hit yields and the dollar, and by extension, this Bitcoin knife edge. If you want the full breakdown on Bitcoin and the S&P 500 divergence, that video is live now. Check the end screen. Smash like if this analysis gave you a clear plan. Subscribe and hit the bell for daily coverage across all 8 major assets. I will see you in the next one.